Good afternoon, traders. This is Kevin Craney with RJO Futures with your afternoon financial market update. Equity markets trading lower for the fourth day in a row here, actually selling off with a little more momentum on the day as we see some profit taking place, and also a tug of war back and forth really on what the FOMC meeting minutes meant yesterday, and also Mr. Bullard out this morning saying that the data has been, quote, a little bit stale. So certainly that leads some to believe that maybe we don't get any QE at the upcoming September meeting. So I think you're also seeing a little bit of pullback on the equity side from that. However, in that pullback in equities that we see, we do see an uptick through the treasuries, and I think some people are also hedging their exposure going into the Jackson Hole meeting at the end of the month, as well as this Fed meeting into September. In case there is additional QE, people are hedged and have got themselves in the market, as this would put a bid underneath treasuries and certainly send those yields a little bit lower. On the 10-year treasury, we see those yields at around 167 basis points today. In the 30-year, actually, we see yields at around 278 basis points here on the day. So yields certainly starting to tick back lower, where we look at the 30-year before, we were approaching that 300 basis point level, so come off quite a bit from there. Certainly as the longer end of the curve is going to have a little bit better performance on any additional QE that may be done. When we look at the reports coming out tomorrow, we do have durable goods, expecting durable goods to be up about 2.4%. When we look at ex-transports, up about 0.5%, so that's a little better than previous month, but we'll see if that's what the data gives us. It was a mixed bag today on economic data, as we had weekly jobless claims that were a little bit higher than expected. And then we had a couple of other data points out, PMI flash manufacturing, that showed that maybe it was a little bit better than expected, what we can expect on this upcoming manufacturing report. And so that certainly is where we're at, and it's a sticking point on the macroeconomic data. It's not good, but it's not bad enough to warrant any additional stimulus. We continue to really just be flat on our back and kind of muddle through here, and that's beginning to show in the market as we don't have the momentum to push forward. I think one particular market to look at was gold. Gold really pushed through today, and even outside of interest rates, that was garnering a lot of attention. And I think the gold trade actually is a little bit more based off of the potential for quantitative easing. You just had a trading pattern that had developed for really the past month, and back and forth. And you saw a momentum break out of that and really hit some stops and propel that forward. So again, it's a tug of war. Will we or will we not get additional QE? That's the name of the game at this point. The market's been hoping for it for some time, and we'll just have to continue to wait and see if we get it. Please give me a call, 888-596-5817. We can talk about interest rates, equities, commodities, whatever you like. As always, remember, futures trading is not suitable for everyone and does carry a high degree of risk.